What can we expect of 2025 when it comes to investment? 2025 is likely to be the year in which central banks implement the largest stimulus package seen in a couple of years, coming after 70 countries spending like drunken sailors in election year 2024. If the market continues to soar because of central bank liquidity, we cannot expect the winners to lose and the losers to win. It is very likely that we will continue to see a huge discrepancy between winners and losers. As we can see here, betting on the European market against technology giants in the United States was a bad bet for 2024. It is likely to be a bad bet if you also believe that there could be a significant correction, because if there's a significant correction, the losers fall as fast as the winners. And mega cap tech is bigger right now than the entire stock market of the European Union. Technology continues to lead the market, and it comes from monetary destruction. What is going to happen in China in 2025? We can expect the Chinese economy to grow between 4 to 5%, but we cannot expect, as this graph courtesy of Bloomberg shows, that the problems of the real estate sector, the problems of overcapacity, and the problems of tariffs are going to be gone. No, we need to understand that solving the structural problems of the Chinese economy is going to take some time. The challenge comes from demographics, overcapacity, and the real estate sector. Add to it trade, wars, and tariffs. It's a dangerous combination. So China continues to grow, but we need to pay attention to those risks. The European Union has proven to be a disaster in 2024. France and Germany are in stagnation. France is in the middle of a very dangerous budget crisis. However, in the European Union, Italy is showing how things can be done with pro-growth strategies, with focus on improving the economy and on getting the private sector back on track. And with it, with the control of the budget, a much more significant improvement in the risk premium of the country. So Italy is showing to France and to Germany how things should be done: supply side measures and pro-growth strategies. Another important risk for 2025 is inflation expectations. Markets continue to expect very large rate cuts based on a very rapid decline in inflation. However, persistent inflation is a bigger risk than what we expect. Governments are not cutting spending. Central banks continue to be hugely accommodative, and at the same time, the economy continues to be bloated by public debt and public expenditure. Therefore, we need to be very aware of the risk of persistent inflation, which means the risk of fewer rate cuts and the risk of some volatility in markets. In the United States, inflation is not falling as it should. Why? Because deficit spending continues to be gigantic and because government spending is out of control. So what we have seen in the past months is that inflation is not falling as it should, considering that the United States is a leader in energy and a leader in technology. Therefore, cutting expenditure is going to be a crucial part of reducing inflation and bringing back purchasing power to Americans. In the Eurozone, inflation is an even larger problem. Why? Because at least in the United States, there's some growth. In the euro area, there is no growth and there is persistent inflation. Furthermore, a large number of the euro area countries have higher than the ECB average inflation target in their latest figures. We need to pay attention to persistent inflation because the ECB is the most accommodative and the most dovish of all central banks, and it is certainly paying more attention to disguising the fiscal insolvency of the French government and some euro area governments rather than combating inflation. Inflation expectations are crucial to rate cut estimates. And what we can see in this graph is that there are enormous rate cut expectations for 2025. Enormous, particularly in the United States and in developed economies. Now, we need to be very prudent about these rate cut estimates, because with persistent inflation, there is a very significant risk that those rate cuts will not happen as fast. Therefore, we must be involved in the stocks and in the asset classes that are less dependent on an urgent and rapid cut in interest rates, considering that the risk of persistent inflation is not small, and if government spending is not reduced rapidly in developed economies, inflation is likely to persist, with the risk of stagflation coming up in the list. The US dollar has risen very fast in 2024 with the victory of Trump. The reality is that what a lot of people expected, which was a weakening of the US dollar, what has happened is the opposite. And what's most important is to understand that the currency war is a war to see who loses first. And who loses first? The yen and the euro are being obliterated by the governments and the monetary policies of their areas, i.e. government spending through the roof, deficit spending through the roof, debt, and therefore destruction of the purchasing power of the currency. So, strengthening of the US dollar is not coming because the US dollar is not losing purchasing power. It's coming because everybody else is making a much worse policy. If the United States really starts cutting expenditure and improving its fiscal policy, it will certainly strengthen its position as a world reserve currency, as it happened in the second part of 2024. Bitcoin and gold continue to be two significant elements to have in a portfolio, trying to defend investors from the destruction of the purchasing power of fiat currencies. Gold is not just a reserve of value, but it's also a proven low volatility cushion against the destruction of the fiat currencies. Inflation and persistent inflation is one of the big risks for 2025. Therefore, gold continues to be a way of protecting yourself against that increasing risk, because governments don't want to defend the reserve of value element of their currency. Only one government in the world is saying that it has as a policy to defend the reserve of value status of a currency. It's the United States. Bitcoin is proving to be volatile, but also a good reserve of value. Bitcoin is a teenager, and more importantly, as a teenager, is starting to show that it's growing and that it's getting better, that it's creating its own liquidity, and obviously its volatility continues to be elevated, but it's changing rapidly. So Bitcoin is also another element to look at in corrections to defend yourself against the purchasing power of currencies. Why is gold rising and why it continues to be very high despite a recent correction that has been absolutely minimal? For 2025, the main element is what central banks are going to purchase. And this graph, courtesy of Goldman Sachs, shows that gold is likely to continue to be one of the main areas of purchases for central banks. This is the purchases of the Central Bank of China, and other central banks are doing the same. They're adding gold to their asset base in order to protect their currencies, because their asset base is showing that the holdings of treasury bills and the holdings of sovereign debt of developed nations is not giving them any type of real added value. With persistent inflation and elevated deficit spending, huge risk of increasing imbalances in the developed economies, what central banks all over the world are doing is to look at their balance sheet and think that the asset base needs to be protected with more ownership of gold. Therefore, for 2025, we need to understand that the euro area continues in stagnation, that it should follow the example of Italy and not the example of France. We need to understand as well that China will have trouble digesting all of the structural problems that they continue to have. However, it will continue to grow faster than most economies in the world. The United States is one of the very few economies in the developed world that will take action to reduce government spending and therefore be serious about inflation. That also leads to a significant divergence between the policies of central banks. The Federal Reserve can be more hawkish, while the ECB and the Bank of Japan continue to disguise fiscal insolvency with money printing. Continue to defend yourself investing, because the 2025 outlook means low growth, risk of persistent inflation. With the risk of persistent inflation, risk of lower rate cuts, and with the accommodative policy of central banks, continued monetary destruction. What we need to do is to continue to be invested, because holding cash is something that governments are going to take advantage of and destroy the purchasing power of the currency. Keep defending freedom. Thank you for watching this video. Please subscribe to my channel, like my videos, leave your comments below, and keep defending freedom. Thank you very much.